Today, we are diving into what your wallet is going to look like in 2026. You see, a whole series of UK tax changes are on the horizon. Now, these aren't the kind of things that are going to splash across big headlines, but they could have a really major impact on your paycheck, your side hustle, and yeah, even your family's future. So let's break down exactly what you need to know.
So let's start with a really important question. You work hard, you get a pay rise, and you expect to be better off, right? I mean, that's the whole point. Well, some new rules might just turn that very expectation into a bit of a tax trap. And it all boils down to one key concept you're about to hear a lot more about. And that concept is called fiscal drag. Honestly, the best way to think of it is as a stealth tax. It happens when your wages go up, maybe to keep pace with inflation, but the amount you can actually earn tax-free stays exactly the same. It doesn't move. And this silently, slowly pulls more and more of your hard-earned money right into the taxman's hands. All right, so let's really dig into what this great British stealth tax looks like in practice. It all kicks off with one very, very important number. This right here, £12,570, is your personal tax-free allowance. It's the amount you can earn every year before you have to pay a single penny of income tax. Now, the key thing here isn't the number itself. It's the fact that it's frozen solid. It is locked at this amount until at least 2028. And that's the crucial part of this whole story. And here's where you really feel the effect. Let's imagine your salary gets a little bump, maybe just to keep up with the rising cost of living. Well, because that tax-free allowance is frozen, every single pound of that raise is immediately taxable. What that means is a bigger chunk of your pay rise goes straight to the taxman than you would probably expect. So how does this fiscal drag actually end up squeezing our paychecks? It creates this kind of pinch, for sure, but it doesn't hit everyone in exactly the same way. Let's take a look at who's going to feel it the most. So who's really in the crosshairs here? Well, first up, it's middle-income earners. They're the ones most likely to get tipped over into a higher tax bracket just by a normal pay rise. It also really hits higher earners who are getting close to that £100,000 mark, because that's where you start to lose your tax-free allowance, creating a really sharp tax spike. And this one might surprise you, pensioners are also caught, because rising state pensions could easily push many of them into paying income tax for the very first time. And the scale of this is just huge. We're not talking about a handful of people on the margins here. The official forecast is showing that by 2026, millions more of us are going to find ourselves paying that 40% higher rate of tax. And it's not because we all got massive promotions. It's simply because our wages have tried to keep up with inflation while the tax bands have just stood completely still. Okay, let's switch gears a little bit, because it's not just about the income tax from your main 9 to 5. There are some absolutely massive changes coming for anyone with a side hustle, for landlords, and for the self-employed. Just take a look at this for a second. Does this sound like you? If you're self-employed or you're a landlord, and your income from that is over £50,000 a year, then a huge administrative change called Making Tax Digital is about to become your new reality. So what does Making Tax Digital, or MTD, actually mean for you day to day? Well, it's a complete overhaul of how you report your earnings. You can say goodbye to that single once-a-year tax return. Instead, you're going to need to use special software to send quarterly updates to HMRC, and then follow that up with a final declaration at the end of the year. It's not a new tax, but it is a completely new way of managing your books. Now, if you're a director of your own small company or an investor, you'll want to listen up. The tax you pay on dividends is going up. As you can see from this chart, for a basic rate taxpayer, it's a pretty noticeable jump. And what that means in simple terms is that less of the profit from your company or your investments is actually going to end up in your pocket. And for entrepreneurs, the cost of a successful exit is also on the rise. There's a special, lower tax rate for when you sell your business. It's officially called Business Asset Disposal Relief. And that rate is climbing up to 18%. To put it simply, it's just going to be more expensive to cash in on all the value you've worked so hard to build. So far, we've mostly focused on what you earn and what you own today. But these changes, they also reach deep into the future, and they affect how you can pass on your assets to the next generation through inheritance tax. This quote really just cuts straight to the point, doesn't it? These long-standing reliefs that have protected family farms and businesses from some really hefty inheritance tax bills, they're being reformed. The message is crystal clear. If this applies to you, now is absolutely the time to be reviewing your plans. Let's just look at the key details. The full tax relief for farms and business properties, Well, it's now capped at £2.5 million. And for investors, AIM shares, those are shares in smaller, growing companies that are often used in estate planning, are having their relief cut right in half. The bottom line here is that more of these assets could now be subject to inheritance tax down the line.
Okay, I know that was a lot of information to take in. So to wrap this all up, let's pull it together into a simple, actionable checklist of what you really need to be aware of as we head into 2026.
This slide right here is your key takeaway. At a quick glance, you can see all the main changes we've just covered. You've got the frozen thresholds hitting all earners with fiscal drag, the new quarterly reporting for landlords and the self-employed, and the higher tax bills for investors and business owners. It's a really clear summary of what's changing, who it's going to hit, and what that impact will likely be. And all of that brings us to the final and I think most important question. These changes are coming. They're locked in. So take a good look at your own situation, your job, your investments, your business, and just ask yourself, is my financial plan truly ready for 2026?